So give us 10 minutes and we'll make you insanely profitable. This video is all going to be about technicals, but also some fundamentals. I mean, billionaires like Warren Buffett are great fundamentally, and Jim Slater, another one in the UK, who always outperforms the market. They've constantly said they, know what to buy, but they have no idea, no idea, but they struggle much more with when to sell because these things that they fall in love with are hard to sell and knowing when things are actually going to fall or have retracements. Equally, the technicals can actually really help with that. But those technical traders don't know what to buy, and I think that's going to be something else we cover too. I mean, if you can buy something that's fundamentally strong, have the technicals to know when to enter, and then the technicals to then know when to sell, that is incredibly valuable, and that has been why we've become insanely profitable. That's why this is the title of this video.
One investor who has mastered both is probably the most successful living trader right now is Paul Tudor Jones, who
Mm.
famously trades on technicals and fundamentals, and he's got a trading mentality rather than the investor type mentality that Buffett has. So if you want to follow a successful investor, check out Paul Tudor Jones and how he does it.
Yeah, exactly. And there's screeners built in these guys' names. I know there's on an app I use, and it's like the Paul Tudor Jones screener, so it combines the technicals and fundamentals, which is fabulous. But so let's start with some charts then. I mean, clearly, a lot of the viewers of our channel love Bitcoin. I mean, so three moving averages we have always lived and died by is the 250 and 9 moving average, and that is over a daily time frame. But then even when price falls below, for example, the ultimate level, which is the 200, price can sometimes fall below that. And then what you can do is you can actually switch to a bigger time frame like the weekly. And this is even more popular on Twitter with how this has always been the low point for Bitcoin. Bounced here, bounced in this area here, although it got slightly below. And we're at that level again now. And I know we made a video on Bitcoin crashing 123K, and we were aiming for sort of 50 to 55. You can swing trade these moves, or it can be very good timing for your long-term ads. But just to really, knuckle down how to use them. I mean, like during the 22 crash, and maybe what we're seeing here is price falls below for the sort of first time, and then actually acts as a resistance. So it comes up to the 200, retraces, and then finally, when it gets back above, you can then use that opportunity to, when price then retraces like it did here on that 200, literally to a almost a decimal point and a round number. So 20K plus the 200, that is like converging factors all coming at once. And that is something that you have made strong points on as well. I'm pretty sure if we pull the RSI up, it might have even been oversold as well during that dip. So there's just lots of little converging factors. And we're actually, if we think about it, in the exact same scenario now with Bitcoin. So that could be something that people are looking to play or at least have on their watch list. If this 200 starts to, come down more, but price starts to trade through it and then starts to bounce on the underside of the 200 there, could be very good. Very similar scenario to what happened here. But also if we take onto the further time frame, because we've fallen through that level, that is strong technicals.
I think one major point I would make is don't try to anticipate what it's going to do. Wait for the technicals to confirm. Don't trade because you think it's going to cross the 200 moving average. Wait until it's confirmed because that is what kills a lot of people in the markets.
Very good point. And actually, that is why, I mean, we mentioned the 200, the 50, and the 9, and that is exactly why I have a 9 period moving average on the chart as well. So, for example, you can see that although there's no support necessarily here other than the round number of 60K, you can see a big fall here. The 9 moving average to the red line, it sort of gets to it, falls, gets to it again, even here, and falls a little bit more, and then starts to trade above it. And then maybe that's where you have your first ad rather than catching a falling knife, which is exactly what you're saying here. And even again here, you can see it falls a bit, but then starts to trade above it again. And then that means the sort of falling knife momentum has been taken out of the move slightly. Even on this move here, you can see how it's all the wicks of the line are coming right up and then finally trading a little bit. So it just times these buys much better, and it's been incredibly useful for myself. I mean, I could quickly pull up oil here just as an example. where actually the trade almost failed slightly on the 200. But I was a bit greedy. I got in too early. I waited for the 200. Should have probably waited for
We've all done that,
confirmation.
Hector.
Yeah, yeah, exactly. But then that nine moving average then broke down here, and you can see that's when I added again, and that was the actual low.
Then
But we don't,
you also see there a nice divergence in the RSI right at the low where there's the price action. The price is lower, but the RSI is higher than the
really
previous
good
bottom.
point. Yes.
So what we're looking for here is you want to you want a confluence of factors. You don't want to trade just on one thing like a crossover of the moving average, for example, because everybody knows that you need to have like a
Mm,
list of at least five things coming together before you press the button. You only want to take a trade if it's an 80% probability of going your way, and that's why
mm,
you need a confluence of these factors. Anybody can make a trade with just one factor, but it's not likely to be profitable. And keep in mind, we are only talking probability here. There are no certainties. It's only probabilities. So you want to be
mm.
trading with an 80% probability that the move's going to go your way, and also have a clearly defined exit point where if it doesn't go your way, you're out immediately with no further thought.
Exactly, yeah. Also, then round numbers is a big one. I mean, this is probably going to be a great example of that. You sort of got the 200 there in support at exactly what was that 12 K, which is probably is that $120 a share. Coming back down to there, bouncing perfectly with the price, getting above the nine moving average, and having just tapped the 200. We see it again here at roughly 25K, and then even on the underside falling through, coming up to it, tapping the 200 again, coming up to it, tapping the 200 again. Was any round numbers there? Yeah, literally about 35K on the same sort of level. The good thing about round numbers is sometimes if there are no technicals and it's just a round number and maybe there is a big retracement, this is a bad example because the fundamentals are crap on micro strategy, but those round numbers can be useful. I will pull up an example of a small cap that yes can be manipulated more, but and this is only recently got above its 200. But if you look at the wick here, it came back down, tapped $1 exactly, and then retraced and bounced, having hit the 200 and then got it back above its 9 period moving average. So three convergences there, which then has then played out. In fact, I posted this on Reddit actually on this day here. Maybe I'll share a screen for that or just post a little screenshot, but very easy. And the nice thing about small caps is yes, the percentage moves can be greater, but you make strong points that obviously you really need to know what you're buying if you're going to do that, because there are, CEOs can have very large stakes, they can manipulate things, or they could just be not very good companies and diluting, ordinary investors, which isn't very nice. But yeah, I mean, some more maybe main market stuff now for those who follow that. I used to trade Wall Street, every day for several years. And those once again were the free moving averages we were using. We were actually using them on a 15-minute time frame, and then I just decided why not swing trade more. And you can see exactly on here, even this is the Russell. Pull this up because you made a good strong suggestion here. You can see how the 200 once again bouncing off of it. One, two, three, four, five, six, loads of times here. Even back here as well. It's very, very interesting. And even the 50 as well, you can see back to the 50, back to the 50, back to the 50 as we are rising. And I mean, once again, it looks like just looking at this, I mean, I only just pulled this up, but once again, round number, exactly there, 2,400. Yeah, it's round numbers are key in a lot of these examples as well. I mean, here, 2,000 was there. As it fell through, scared people for a little bit. Where did it tap? 2,000. So it's kind of like, even if you were catching the falling knife, you might have been trading in a way which was just without confirmation, but below a certain round number within reason. I mean, here was 22,200 as well on the 200 here. So very interesting. I mean, but if we look at maybe the Wall Street or the S&P 500, this is, another good example. Multiple bounces here. If someone's looking to put their whole life savings on the indices or whatever, this would be the time to put big chunks on. Some people say just buy all the time, and then when it hits these levels, just buy the ordinary amount. But I would say you can time things better. I mean, even on the underside, you can see how, fall through and then resistance, resistance, resistance again. But now we start to chop through it, and then kind of like we were saying earlier, once something starts to chop through, you can then look to trade in the reverse direction. If you have a buying bias as well. So very, very helpful stuff. And then once again, this is useful from a, then looking at a weekly or if price then falls. So if you were just always looking for a buying bias, you might always look, okay, price always bounced off the 200, but maybe during COVID or during this 22 rally, oh, price has fallen through. I'm just going to stop adding. Where may I add? And then you might increase the time frames of the moving averages. And you can see in that 2020 era when it was chopping through it, where did it come down and tap? Literally that 200, but now on the weekly time frame instead of the monthly. So this is how you really, really, really can time things. So you might have got in too early, but then you might have waited to then do your second ad at that 200. And then it's a question of for individual risk parameters. Are you going to trade these things now with options or leverages with tight stops at these levels, or are you just, a long-term investor, a cash only, and using these to assist in that process? We would be keen for people to maybe even send tickers or charts for us to review because there's a whole host of different opportunities out there. I mean one stock we covered I think back in November was fundamentally strong. Technicals were actually against us, and you can see how we were sort of rolling over here. But then finally we started to once again chop through that moving average and that technicals that were against us. Fundamentals were strong. It was trading around 1-to-1 with its cash, the price to cash ratio with no debt. And then start to trade through it, was then bouncing off the 200 in support, lots of little rallies, using those moving averages, that's 16%, and then off again to 55%. I think we mentioned it again in here, back to the 200, up again. So it's just a very useful tool to have in the toolkit. I mean, if we look at Robinhood during that 2020 period, came down, started to chop through the 200 again, and then acting as now a support level, having struggled to get through it, and then those levels to add, and you can be confident you're buying at the best possible time.
I think if you look at anyone that is trading the market regularly, the only way you can trade the market regularly is by using technicals. People will say derogatory things about using people using technicals, like it's like reading tea leaves or something like that. But what technicals are is the motions of mass crowds of people shown in you can see them in a chart.
Mm,
So it's actually very valid. And while there are no guarantees, you can increase your probability of successful trades. And in fact, if you're trading short term, there's no other way to trade other than technical because the fundamentals, yeah,
yeah.
you should, something with these small cap stocks that you're talking about, Hector, you should only trade those if you're happy with the fundamentals and
Mm,
it's not a duff company that's going to get business. But you can still use technicals, and if you trade intraday trading or even weekly trading big cap stocks like Tesla or Apple, then you need to
mm,
use technicals, and it's going to give you a huge advantage and going to increase your percentage returns if you learn how to use it properly. So yeah, that's my point of view.
Yeah, and from someone of me personally, and I know you still do quite a bit of day trading, but I did day trading. It worked in part, but it's very time consuming. And a lot of people watching it probably just, people like me got their other jobs now, and they don't really have loads of time to trade every single day. This stuff really works, I'd say, even best with swing trading, because also then you help to eliminate for yourself the emotions of trading too. The swing trading you kind of set and forget, and you don't really need to constantly be checking in. But and swing trading, often you can make the same percentage returns as you might have been if you were day trading and paying attention every single day. If you're swing trading, maybe looking twice a week, once a week, with maybe some alerts if the price does hit certain levels you're looking at. But and these technicals all really understood in a very short video. I think we said 10 minutes, but maybe it went over. But maybe just watch the first 10 minutes if it went over 10 minutes. But yeah, very, very helpful stuff. And it's definitely something that everyone can add to their toolkit as a beginner as well.